So like you pointed out and correctly pointed out, is it could be a daisy chain where one fails and then 3 or 4 days or a week later, the pressure gets too much for somebody else and they fail and somebody else has to cover their short position. And pretty soon it could set off a chain reaction and the whole thing could blow up in a New York minute. That possibility is something Ted has been talking about for years now and is always an open possibility at any time.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And I am quite excited today because I have a first-time guest to the show, although by all means, not someone who is new to this, has been one of my great teachers over this past decade, whether he realized that or not, but fortunate to be joined today by Ed Steer of Ed Steer's Gold and Silver Digest, which you can find at Ed Steer, S-T-E-E-R, goldsilver.com. And Ed, you're on my list of people. I wonder how you accomplish as much as you do per day, because basically every day of the week you send an update with, if anybody just wanted one single document to know what's really going on any given day, what you share each day is sure incredible. So it's really a pleasure to have you on here. And how are you doing today, my friend?
Oh, well, thanks for having me on. I really appreciate it. And I'm doing great and looking forward to our chat today.
Well, that sounds good, because there is certainly a lot to dig into. Obviously, on the show, quite a bit talk about silver manipulation. And you and Ted Butler really at the top of the chain of people who have been studying this for such a long time. And, if there's any background you want to include, by all means, feel free. Although I'm darn curious of where you see this whole story at this point. Unlimited quantitative easing, surge in metals over the last couple months, supply going offline. And of course, if you haven't figured out the date when it's all going to happen, we'd love to hear that. But while that's tricky, any thoughts you have, I'll stop now and just let you take it from there.
Okay, well, first of all, I've been involved in the precious metals for about 20 years now. And when I first started out, I was listening to every Tom, Dick, and Harry that was on the internet. But it didn't take me very long to realize that it was Ted Butler who really had the goods of what was going on, because he said the experience, he was a broker himself. And he's been studying this thing now for over 30 years. So once I cottoned on to his work, pretty much everything you read in my column every day came through Ted first, because he's the world authority on what's going on in the COMEX futures market, because that's where the prices of all commodities are set, and that's where the price management scheme is going on in all the precious metals, and it's been going on for a couple of generations now, actually since gold was first put on the COMEX back in 1973. So it's all of Ted Butler's work, and right now the precious metals, as everybody knows, I'm not talking to any rookies out there, are being highly managed. And as of, say, 1987, we go back that far, everything is managed now. The stock markets, and of course in the last, since the great financial crisis of 2007, 2008, they propped up the markets then. They've been printing money since. And then, of course, starting September last year, the first real crack in the pin got stuck in the bubble. And then, of course, the bubble burst in March. And now it's money printing to infinity, and basically they're going to burn the currencies in order to prevent the stock markets from crashing, which is what they would do the moment they stop printing money. So there are no markets out there anymore. They're only interventions.
Yeah, it's darn unfortunate. I find it amazing how the Fed openly manipulates the bond market and just calls it policy, hopes everyone, doesn't notice the emperor is pretty darn naked. Obviously, a lot of that. Go ahead.
Buck naked, Chris. Absolutely buck naked. They're making everybody knows what's going on right now. That The Fed and the Treasury and the central banks of the world are trying to prevent the inevitable from happening, and sooner or later they're going to fail. So it's just a disaster, and it's criminal from one end to the other.
Yeah, and sometimes when you just like read these stories out loud, I mean, you don't need a economics PhD to break it down. I mean, it sounds silly when you say it. And the Fed's printed 600 billion this week, nothing to see here, and obviously, I think a lot of us are expecting at some point that will be reflected in the precious metals. Although to go back a little bit in time, I would love to hear your thoughts on what actually happened in April of 2011 when we have silver hit $49. Then on the same Sunday night, I remember hearing Osama bin Laden had allegedly been killed, and thinking, again, I was quite focused on silver then. I'm like, well, gee, I wonder how the market's going to open tomorrow. That was a Sunday night. We saw silver drop $6. I still wonder, was this US dollar system going off the tracks back then? And it was only that they hammered the metals and kept it in check that have led to these last 9 years. But love any thoughts you have on that.
Well, if going back that far, J.P. Morgan, as Ted Butler pointed out, was either forced or volunteered to take over Bear Stearns in, was it 2008, to prevent them from going bankrupt, because Bear Stearns was a huge short in the gold and silver market. And if they let the company go bankrupt, then they would have been forced to go into the market and cover all their COMEX short positions in gold and silver, and of course that would have driven the price to the moon and the stars. So J.P. Morgan was asked/coerced into taking over the firm, and so since March or April of 2008, I think Ted figured it out. J.P. Morgan has now been the big short seller of last resorts up into and including about 6 months ago. And they've been actively suppressing the precious metals prices ever since. I don't think it had anything to do with the dollar. It's just the fact that if they hadn't stepped in and saved Bear Stearns, we'd be looking at gold and silver prices that were, quite frankly, something you would not believe right now. So J.P. Morgan's been the kingpin in all this thing, and Ted has been following their every move for the last, guess how long it's been, ever since 2000, so it's last 12 years.
Yeah.
So they basically run the show. They are the boss, and when they decide that silver and gold prices are going to rise, that's where they're going to rise. But until then, they're sitting right now slightly long in the silver market and market neutral in gold, and they're sitting on, Ted says, 25 million ounces of gold, physical gold, plus 1 billion ounces of silver. So they're not going to be giving this away on the cheap. They're going to be making a lot of money, and I can tell you right now, everybody should be riding their coattails because at some point, I don't know whether it's going to be this today, tomorrow, next week, next month, or whatever the plans the boys have for the future. I can guarantee you that someday gold and silver prices are going to be magnitudes higher than they are now.
I certainly agree. I just wrote a book which actually set out as some quest to disprove what I thought. I was like, there's got to be some other explanation. I haven't been able to find it. And you can feel free to pass on this one if you'd like, although I'm curious, from studying it so closely, can you even venture a guess as to what do you think is the thinking inside of JP Morgan? Obviously, Ted has written a lot. There have been times where they got flat or exited most of their short position. And certainly, whatever is the exact amount of metal, I mean, we can see what they have on their COMEX report, and Ted certainly puts a lot of data points on the rest of it. Do you think that they're going to just let it rip at some point? I mean, it seems like there have been chances for that to happen, and I know it's a hard thing to know, but any guess as to what do you think the thinking is inside JP Morgan right now?
Well, I'll tell you what, as Ted says, and he's absolutely right, you got to be able to think inside a criminal mind. I mean, the average person in the street, whether it be you or me or 99% of the people listening to this interview right now, we're all basically normal people who are brought up to, honor our father and mother and tell the truth, da 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 da. And as grown and mostly mature adults, this is the kind of life we lead. We don't ever come across people like, say, Jamie Dimon or the presidents of huge corporations. All these people are basically sociopathic personality types, and at the top of the biggest organizations like J.P. Morgan, you're going to find some minds that are just not compatible with the average person. They come across in public as normal people, but behind the scenes they are anything but. So unless you can see into the mind of Jamie Dimon, there's no telling what the plan is, whether J.P. Morgan's involved on their own, or whether this is some grand scheme that they're going to revalue the dollar or back the dollar by gold. There's all kinds of things. All I can tell you is that Jamie Dimon and J.P. Morgan are going to come out of this thing smelling like a rose and want to be one of the last banks standing, because they're all set and ready to go anytime they decide to let the price go.
Yeah, it sure does seem like that is the case. Now, one of the other banks that we've heard involved in this a lot is the Bank of Nova Scotia, who now they've been talking about exiting the precious metals business. I believe it's a couple of years now. There was some news out about them this week. Any thoughts on their role in this and what their current status is?
Well, they bought Mocata back, I think it was in the late 90s. And that was when their first. That's how they first got involved in the precious metals business. I think that's why I'm quoting Ted correctly on that. And they've always been, according to a lot of people, one of the main precious metal price riggers. Even before then, Scotia Bank took them over and found themselves with a healthy short position in gold and silver right away. And this has not always worked out to their advantage. And Ted feels that they're one of the big 8 short traders out there right now, along with Citigroup and HSBC USA and probably Goldman and Morgan Stanley and a few other banks. So Scotiabank, as you correctly pointed out, tried to sell Mocata, was it 2 or 3 years ago, and I think Goldman looked at it and Citi looked at it, and they both passed for obviously good reasons, because nobody wanted to assume an immediate unlimited liability, which is what a short position on the COMEX is. So they passed on it, and of course Scotia hadn't been doing anything with their Mocata precious metals arm except treading water, and they still have, to Ted's belief and even to mine, that they still have this short position on. And like you said, and I think I carried the story in my column yesterday or today, I can't remember. That they're winding down the business. Now, what that means, I'm not sure. They've been talking about doing this for a couple of years now, and one of these days they're actually get around to it. But in order to wind down the business, they must in turn cover the short positions in the COMEX, and how they're going to accomplish that without driving the price to the moon and stars, I don't know. I'd love to be a fly on the wall over at Scotiabank, but they've got this short position in gold and silver, which could end up sinking them if J.P. Morgan decides to let the price rip. But there's a bank that you really should watch, because if we see gold and silver prices rise, that bank, and along with Citigroup and HSBC, are going to get caught in the crossfire. So Scotiabank is just one of the problems, one of the big problem banks out there, as far as short positions on the COMEX and precious metals are concerned.
Yeah, and I like what you said about being a fly on the wall there. I mean, it's fascinating enough just to follow the clues that we can pull out, yet hopefully maybe one day we'll even find a fraction of what is actually going on behind the scenes, because I'm sure it'd be beyond fascinating. And along those lines of perhaps, I mean, I guess not perhaps Scotia trying to pull out, but one of the things that I've been wondering about is that the silver market really did follow that pattern for a couple of years where you'd see the banks get short and the price was going to go down. Then you'd see them get maybe not long, but flat, and it went up, which held primarily until that rally last summer where we kept seeing the banks get short and the price didn't come down immediately. Now it ultimately did. Then fast forward a couple months later, we actually saw silver below $12, which was interesting. But it feels to me as if World War III might be going on beneath the scenes of the market, where we've seen, and you can tell me whether you think metal actually goes into SLV and GLD, but at least what's reported, it looks like someone was buying a big chunk. It's up to about 200 million ounces over the past year. So it seemed like it was getting harder for the banks to have the same impact on the price. Um, and as you've talked about, and Ted reports often, these guys were facing a pretty big open loss. I would imagine that's still the case in gold. Any thoughts on that? Is there? It seems like it's getting harder for them to execute what they've done for so long.
Yeah, well, that's certainly true. Ted just came across that thing last June or July or something like that, where the price was driven down, but it didn't go down anywhere near as far as anyone thought it would. And what happened is that the managed money traders and the other traders refused to go on the short side really big. I mean, refused to allow they didn't go short. Right. So the commercial traders who were short against them couldn't buy the long positions that the managed money traders would normally be selling. So all of a sudden, this back and forth, up, down, came to a sudden halt last summer. And all of a sudden, these large eight traders, which I said include Scotia and Citigroup and HSBC and JP Morgan at the time, found themselves in a situation where they weren't able to cover the short positions because nobody else would take the opposite side of the trade. So now they're stuck there. JP Morgan was able to stick handle their way out of that over the last 12 months, as Ted has been reporting every week. And now they're out of the COMEX futures market in gold entirely and a bit net long in silver. So these big eight traders are stuck on the short side, and unless the other traders are prepared to sell them their long position, which they're not anxious to do. Like I've pointed out before earlier in this interview, when the price does rise, these guys are already in a world of hurt. And I think Ted pointed out in his Saturday column that they were, their margin call losses were $6 billion already. Mm-hmm. So those aren't, that isn't chicken feed, exactly. To Citigroup maybe and HSBC, it's not much money. But once you get down the ladder to who's ever in 8th, 9th, or 10th place on the short side, you're talking about a serious amount of money for whatever firm is holding those margin call losses, even though they're only paper. So it's one hell of a mess that these shorts are in, and it looks like they're trapped and they're not about to get out anytime soon.
Yeah, and doesn't that also set up a bit of a prisoner's dilemma where, let's say one of these, I get the feeling, again, you'll probably have a better handle than I do, but it seems to me like if even one of the smaller ones said, gee, the Fed's printing unlimited, this doesn't look good, screw the rest of these guys, I'm going to pull out now. Is that dynamic in place? Am I getting that right?
It's always in place, and Ted has been looking for that for a long time. He's not looking at the big eight traders, like I said, or the big 2 or 3 or 4. He's looking at the smaller players, whether they're number 8 or number 9 or 10 or 12 or whatever. They've got, let's say they got 900,000 short contracts, and their risk management says, you've been sitting on these things for a year, we're in the hole for God knows 20 million or 30 million or 50 million or $100 million. And we just got to get out of this thing. And so they're forced to go in the market and cover them, taking huge losses in the process and driving the price up because they have to go out and buy a long position to cover the short position. And that in turn drives up the price. So what's going to happen then is that in order to preserve their own positions, the other 8 traders or 10 traders are going to have to step into the market and take the short positions this company just covered. So all of a sudden, everybody else is even more peril than they were before this guy covered. So like you pointed out and correctly pointed out, is it could be a daisy chain where one fails and then 3 or 4 days or a week later, the pressure gets too much for somebody else and they fail and somebody else has to cover their short position. And pretty soon it could set off a chain reaction and the whole thing could blow up in a New York minute. That possibility is something Ted has been talking about for years now and is always an open possibility at any time.
Yeah, that's what I've been waiting for. We'll see how long it takes. Although a couple last quick ones for you. One, I will call this speculation. I've heard this through the grapevine over the years, so not calling it fact, but I've heard from folks suggest that somewhere between the $20 to $25 mark on silver, a lot of these bank derivatives get triggered. Now, by all means, I am not a technical analyst, although to the degree that, I think if people are going to act on certain price signals, and, I do see, we got close to $20 last year, got close. I think we may have broken over $20 in 2016, but if someone told me there was a lot of resistance there and that, a bank melts down, I'm curious just if you ever heard anything about derivatives getting triggered in that, and that being maybe part of the reason why it seems like this thing hasn't been able to get above 20.
Well, right now silver's barely made it above its 50-day moving average, and its 200-day moving average is still $1 or so away. And what will trigger this thing is basically what the individual companies decide is the panic point for them, where their losses are where they become fatal to the company, where the risk manager goes to whoever and says, look, we're underwater and this thing is going nuclear, whether it be at 19 or 20 or 21 or 25, where their losses become so large they're a threat to the ongoing viability of the company, which is what happened to Bear Stearns. So it could be $19, could be 22, could be 23, whatever that price is for whatever firm is out there that has a short position on of some size, that will be the trigger point. There's no technical point for it to be. It's whatever that company decides. It says, oh, fine, our losses are going up like 50% a day. We can't afford this. Get the hell out now.
Yep.
And of course, when one goes, it'll set off the next one and the next one. It could be any price between here and say $30.
Yep. Yeah, that'll be a hoot to see how that one plays out. Are you holding out any more hope for this Department of Justice investigation, or have you thrown in the towel on that one? It's hard to take seriously when they arrest people for spoof, and you see spoofing on a daily basis. But what do you think?
Well, I'll tell you what. Ted's given up hope, and my hope is fading fast as well. It is interesting to see that these traders who have been charged, pled guilty and charged and awaiting sentencing, haven't received sentencing yet. And that sort of died off into the distance. And of course, as you alluded to, Scotiabank, the story came out yesterday or today or on Sunday or whenever it came out that Scotiabank is under investigation by the CFTC and the Department of Justice for trades in their precious metals division as well. So there's all kinds of little signals that we're seeing from the Department of Justice and the CFTC that there's ongoing stuff that we can, we just get little hints of and little glimpses of, that under the surface there's big stuff going on right now. We're not privy to it. Like I said, love to be a fly on the wall in Jamie Dimon's office or in Scotiabank or in Citigroup, where all this stuff, or the Department of Justice or the CFTC, and what's really going down, we're not privy to, but there's just a little bit of smoke seeping out of this crack and this hole over here, and the signs are over the last 2 or 3 years that something is happening under the surface. JP Morgan is now out of the short positions and they're long, and they got physical silver and physical gold. If JP Morgan is doing it and everybody's rushing into all the gold and silver ETFs in the last 2 or 3 months, that's sort of a sign, along with all this massive money printing, that this can't go on forever. and the smart money is exiting the scenes, and people like Jamie Dimon and JP Morgan are getting ready for whatever comes next. We just got to have the patience to wait this out. And when that day does come, our rewards will be substantial, just like they will be for Jamie Dimon.
Yeah, well, half of that's good. Maybe the other half.
Yeah,
Who knows?
I'll
Maybe
take half. I'll take half. I'll take half.
who knows? Maybe Jamie's listening to the show right now, and he's sitting there saying, "Wow, these guys seem pretty nice and friendly. You know what? They'll have a change of heart. Donate all the silver proceeds to a charity, or send some silver your way because I darn think you deserve it." And actually, one last note on what you mentioned there. I have heard that the FCA in London, which I guess is one of their financial crime agencies, I don't know if that's what it actually stands for or not. I've heard they're taking it more seriously because they realize their banks are at risk, whereas here, the banks maybe are the government. So we shall see. Yet in the end, and this will be our final question today, sir, starting to remind me a lot of the London Gold Pool. And I've spent the last 11 years trying to figure out, is there any way? I mean, it doesn't seem like bankers are growing a conscience. I mean, it seemed to me that this will go on until one day someone shows up or stands for enough metal for delivery and they can't source it. And then when that day happens, whether it's a force majeure or the COMEX closes, however it goes down, but at some point we're going to see a similar outcome to the London Gold Pool where the market got pressured. Is there any other possible outcome, or is that what we're headed to, whether we know when or not?
There's not enough information to know exactly how this is going to end. The parallel with the London Gold Pool is very similar. It's like Mark Twain's history. It doesn't always repeat itself, but it rhymes. And what we're seeing now in the paper market, in the physical market, and what's going on in the COMEX gold inventories, and the amount of gold and silver going into all these ETFs in a panic right now, there's obviously the situation cannot exist forever. You cannot suppress a market forever. And at some point, whether it be by design or by circumstance, this will end. And when that day arrives, it's going to be quite a sight to see. And whether it involves London, the agency you just spoke of, or whether there's physical delivery default, or whether somebody panics and decides they're going to cover the short position, someplace, somewhere, sometime in the future, it will all come to a very abrupt end, and you won't have to, as Ted says, you won't have to ask if this is it or not. All you'll have to do is look at the price, and it will be obvious there.
I couldn't agree more. Some days I try and behave myself on the show, although I'm not telling anybody to do anything. But my personal gut feeling has been that even as wild as I think it will be, I have a feeling whenever it happens, even guys like you and me, Ed, will be stunned by what goes on. I mean, I'm already stunned that the Fed does unlimited printing and everybody's cool with that, but perhaps all the more reason for us to be grateful for everything you're doing. Everything is shared here. And again, I've mentioned that Ed Steer's Gold and Silver Digest, which can be found at Ed Steer. Of course, the link is in the description button below. I am quite proud to be a subscriber, and I'm grateful for all that you share. And thanks again for joining me here today. Really a pleasure to finally catch up with you, and we'll look forward to doing this again soon.
Okay, thanks so much for having me on. I appreciate it. Good afternoon to you and your listeners.
Well, thank you, Ed.